10 years now, just coming up to it. I think price ladders offer a human trader the best opportunity to be able to take in as much information as quickly as possible, because in a game where you're trying to take in information and then sort of process it and then make a decision, you need to have something where the information is clear and more visual. If you just have loads of numbers on the screen, you're losing information. You haven't got depth, you haven't got the ability to look at loads of separate markets and see one jump up just out the corner of your eye, which you can with ladders, which is a lot harder to do with just having numbers. Also, it gives you a visual idea of how far it's gone very quickly. So I think that for humans, I find price ladder are the easiest way to bring in a lot of information very quickly. When I'm trading the price ladder, I tend to try and look for areas where you're seeing a lot of volume over maybe 2 or 3 minutes, where normally would appear a quiet time. So therefore, it immediately draws your attention. Why is this volume here? So as soon as you see that kind of volume, I'll be then trying to identify what is going on within that structure. Is it like going up and down 2 or 3 ticks? Is it 1 or 2 ticks? Is someone trying to build a position? And then within that, try and look at the bid and offer and see something being reloaded. It gives us an opportunity to take a tick quickly, but at the same time always being aware of like the wider structure, because you don't want to be there trying to nick a tick or two when you're sitting right above a 60-minute level, for example, where you think you'll be able to stop out for a tick, but all of a sudden the market runs away from you. So I think my main pattern, as it were, is to look for these little areas of high volume when you wouldn't expect them to be there over maybe 1 or 2 minutes. Lots of time. That's all it is. I think lots of time, and then at least trying to think what looks normal, what doesn't look normal, and then if you have an understanding of why that volume is going through, if there's no real reason for it to be happening, if we're not in a particularly important area of the market, not an important time of day, not an important area, or no real fundamentals about, then I'd be thinking, okay, well, that's a time to sort of switch on and be looking around the price action. On price ladder trading, I think the most important bit is to, as soon as you identify something that you think is an idea, you've got to try and wring its neck in a way. If you think at a certain time of day you see something coming in, you better be switched on every following day at that same time of day looking for it. You don't want to be, there might be 4 or 5 little trades you can do a day off the same little trick you've seen in price ladder. But if you just miss them because you weren't focused, you've just given up so much edge. So I think probably the strength or the most important thing is to remain focused when you think there might be an opportunity or something you might have identified. So you don't want to, you miss 1 or 2 of these, there might only be 4 or 5 in a day, you're giving away all your edge. It took me a while to even realise what price ladder trading was, to be honest, because in my original place where I started, perhaps we weren't so aware. It was kind of something we learnt as we went along. But as I became more aware of it, it's something that you're never always profitable at it because it constantly evolves. If you think that you've got a strategy that works, that strategy probably won't work in a year's time. You've got to but the fundamentals which you built that strategy upon will still be valid. So I think the most important thing is to be aware that it constantly evolves. I think the toughest part is the consistency. And when I say consistency, I don't mean P&L consistency. I mean being able to consistently get yourself in the right mindset, because being a trader isn't a very natural thing. You have to constantly put yourself outside of your comfort zone. You constantly have to, for many hours a day, maybe 8, 9 hours a day, stay in a level of focus. You have to deal with a lot of things that people don't like dealing with, such as loss. Like, we have a cognitive aversion to loss. So if you'll say down on the day, you've got to be able to deal with that. If you're down in the morning, you've got to be able to deal with that and not be too sucked into, oh no, I've lost this on the day, or where's my account at? You've almost got to pull that to that one side, be focused on, am I growing? Am I evolving? Am I doing my processes right? And every morning, you've got to be getting yourself in that state, that mindset, because it's very easy to say, oh yeah, I'm going to do that, write out a trading plan, write out your trading ideas. But in my experience, the guys who make the big money, who consistently make the big money and go on to make even bigger money year on year, are the guys that are almost every day can get themselves in that sort of mindset, that approach, that they don't have the sloppy days where they make the sloppy decisions where they're just like, oh, I can't be bothered, oh, I'm a bit tired today, I'm just going to take it easy. It's the people that are willing to constantly, day after day, just do the grind of putting themselves in the position to get better. Okay, that very much depends on the trade. Obviously, I trade a lot of price ladder, I trade a lot not of price ladder. Sometimes if you're trading off a price ladder, you can be holding a trade for 1 second, almost no time at all. But then sometimes a lot of these patterns might take long to evolve. So then you might be wanting to hold it for, if it's a price ladder pattern that may be worth, say, 3, 4, 5 ticks, 6 ticks in a thicker market, you might have to wait for it to just slowly clear those prices, which can take 5 minutes, 6 minutes. Or if you're doing bigger, longer term trades, I might hold stuff for 2 or 3 hours, but those kind of structures, I'm not really looking at the price ladder. I think when I'm getting in and out of trades, particularly out, I'm always looking, is the trade still valid? Is the plan still valid? So if I have seen something I believe in the market that, oh, I might be able to nick a tick here, a 2 tick here with 1 tick risk, based around an idea of what I'm seeing in the ladder, as soon as that becomes invalidated in any way, I'm looking to abort. Or on a longer term trade, I'll be going, okay, well, there's a 60-minute level here, and I'll give it a lot more air, because if I'm trading on a 60-minute chart, I can't trade that with the same time horizon I'm trading off a ladder. I'm trading seconds. On a 60-minute chart, I've got to be prepared to wait 30, 40, 50, 60 minutes, maybe 2 or 3 hours for the trade to purely evolve. And if I was getting concerned by every time we went bid, offer, or a couple of ticks up, a couple of ticks down, you'd never hold the trade. But in the same way, when you're doing the short-term trades, you've got to be a lot more perceptive to what is going on. And if you do see strong offers coming in and it changes your plan, you've got to quickly just hit market, get out, reassess. I think adding to positions is the hardest part of trading, and a bit where people quite often perhaps underestimate how difficult it is. You can very quickly add to a position and get yourself in a lot of trouble, because quite often when a position appears at its best, you don't want to be adding to it. If anything, you want to be lightening up, because you've got to be thinking, if I wasn't already in this position, would I get in at this point? I think quite often, I can speak from my own perspective, that temptation just to go, oh yeah, I've got something here, and add something. Whether that's net positive over a year, I'm not so sure. I mean, there definitely are times to add to your trade, but you've got to be very careful about when you're doing it. And when you are doing it, you don't want to be misweighting your trade. So if you're long 5x at one point, and then it puts you a bit on side and you feel better about yourself, do you want to be putting 10x or 5, like doubling or tripling your position at that point, moving your weighted price a lot up, a lot higher? Or do you want to be going, okay, I feel a lot better about myself on this trade, but do I want to add to it purely because I feel better about the trade because I have the confirmation of the move? Usually when you're waiting for a confirmation of a move, it's not a good sign. You want to be at the setup. So yes, I do add to my trades, but it's something, the longer I've traded, I become more and more careful about. And when I do it, I only do it at times, usually in a pullback into a longer structure, or in a much smaller size than the original position. So I might go, oh, I'm long X amount here, I might add another 20%, 30%, but I don't want to destroy the original core position. That's the way I approach it. If you'd asked me that 7 years ago, I'd have said yes to an extent. Now, when dealing with more news events, yes, I could deal without a chart, but I think as I've become more of a rounded trader, I do use charts a lot more, because even trading price ladder stuff, I think it's very important to be able to bring in other aspects. You don't want to just be going, oh, I'm this sort of trader and I'm going to throw everything else out. Because if you can actually bring everything in, you can sort of, it gives you clues. So you might be going, I'm trying to do some price action trading here, but as you've got to be aware of the bigger structures. You've got to be aware of, are a lot of people looking for a big breakout here on a 60-minute? And if I'm sitting here trying to nick a tick and we're going through a 60-minute level, that all of a sudden is going to affect the risk of the trade I'm trying to take on. So I think nowadays, to throw away your charts just to look at price, I think you're disadvantaging yourself to an extent. I'd say the first thing is just have a robust daily process, but that goes for all types of trading. You've got to have a process you go through every day. But for price ladder in particular, I think you've got to know the times when you think the patterns that you're starting to recognize might happen most, and then when those times are about, you've got to be glued to your price ladder. There's no point going out to lunch because you're a bit hungry, or not having food at your desk, or whatever it is. Just these little things, they sound innocuous, but can make all the difference. So when you identify a time or a market where you think there's something of interest, be a hawk, focus on that, because that might just uncover a little stone and it might lead to something else, and before you know it, you might uncover something that works really well for 3 or 4 weeks and can give you huge profits. But it's having that focus to just, when you start to see something, just sort of follow it up and keep looking at it. I think it has decreased the edge around the 1-2 tick winners on the price ladder to an extent, because I remember a time maybe 7 or 8 years ago where the game was played out in a lot more obvious way. Now, I've got a lot of friends that work at these algorithmic places, and they tell me they predominantly are just fighting for that 1 or 2 ticks. But then as a human, you can adapt quicker than the algos, because you're not relying on data. And you can see, oh, well, because these 2 algos are going at each other, I can see a little strategy here. I could overlay over these algos, nick a tick, nick 2 ticks perhaps, just on a pure price ladder trade. And that might work for a couple of weeks and it might go, but then you might build a foundation of, okay, well, I recognize that pattern, so that pattern, it might turn up again in 3 months, 6 months. So it's a case of, so you build an inventory of these little sort of price action trades. And although algos have changed it, and it is maybe not as obvious some of what's going on, they have also led to some extra opportunities turning up. I'd say as I've got older, as in more experienced, I've evolved to include a lot more trading strategies and more approaches than perhaps I did when I started. When I did, I had maybe one or 2 tools in my toolbox. I'd have like this price action trade and maybe another little setup. But as I've traded longer, I've built and added more trades. And the advantage to that is that you've always got something you can rely on, because the market goes through phases. Sometimes it's breakouts, sometimes it's price action, sometimes it's fundamental. So perhaps I am less focused on price action than I used to be, because I don't need to be as focused on price action, so I have more tools. But when I do recognize something, I will go back to the principles that served me well in the past, where I will be all over it, focused. If I noticed at a certain time of day in a certain market there was an opportunity, every day until that opportunity disappeared, I would then be going, that's part of my day now. At that time of day, unless there was not something which I saw as a greater opportunity set up, that would take all my attention. Someone who is trying to trade order flow, I would say, first of all, screen time. And when I say screen time, I don't mean idle screen time, because it's very easy to someone to go, oh yeah, just spend some time in front of the screen. In the same way, when you're a kid, you go, oh, I'm just going to revise for this exam, and you put a book in front of you. There's no point unless you're actually doing some sort of like deliberate practice or deliberate trying to gain something, going, what am I actually looking for? Trying to recognize a pattern, trying to see what's going on. Is this guy taking this offer for anything? Is there anything there? Okay, maybe not. But if you're constantly sort of asking yourself the right questions of, well, is there a reason why this could be happening? Then you're going to get yourself somewhere. So for my daily routine, I start off every day in pretty much the same way. I'll come in and I'll read through something what I call a world-class trader vision. So what I've sat down over the years and gone, what does a world-class trader do every day? What are his habits? Is he focused? Is he process-driven? All these sort of things. Just to refresh in my mind, so therefore I know this is what I'm aiming at. Because we're never going to get there. You're always striving for this like perfection of what it is to not be a perfect trader and make money, but to be a perfect trader in terms of the inputs, the processes. So I read that, and then next thing I'll do, I have a few lines I've written out of what am I trying to achieve today? What's my like intention, as it were? And it isn't, I'm not sitting there going, oh, I want to make millions of pounds today. It's like, these are my processes, these are my strategies. I'm trying to put on trades that are sensible on a risk profile, but still profitable. So I have something there I just read out. So then I'm clear on what I'm trying to achieve that day. And then I do something where I have every hour of the day, just a little table I've made. And I print one out every day, and I just give myself a score every hour out of 10 on how close I am to fulfilling that sort of world-class trader vision and that intention. So that I'm not scoring myself 10s all the time. But what that does do is, if I have a sloppy hour, or it allows me, the day doesn't just sort of slip away from me. I go, oh, I can pull this back. So I might go, oh, I gave myself a low score there, 4 or 5. I made some trades I wasn't happy with, or more happy. I wasn't happy the reason I made the trade, or I was chasing PNL or whatever it is. So that's what I do. I always try to stay on top of my process, stay on top of what I'm trying to aim at. So I use this score sheet just to go throughout the day, every hour, tick it off. It takes me 10 seconds at every turn of an hour. I just go, and then maybe a couple of notes on anything I did well or anything I did badly, and then on I go. So it's that kind of constant process. Then at the end of the day, just a quick write-up. What do you do well? What do you do badly? Try and learn from the mistakes. The quicker you learn from the mistakes you're making, the easier it is. Markets are constantly evolving. If you're not evolving with them, you're not going to be around. You're not going to be around, or you're going to just have a horrible existence, then probably die a slow death in the markets. There's just no point. So you've got to constantly be evolving. You've got to constantly be looking for new strategies, as adding tools to your toolbox, different strategies, because something might not work for 2 years, and all of a sudden it comes back and you go, oh yeah, I know what I was doing there. You can read through your notes maybe from when that worked. Before you know it, you can deploy it again, crack some size and see what happens. But if you're not evolving, I'd say you're in trouble. And it doesn't mean you've got to constantly be adding new ideas. You don't want to be searching holy grail, but you've got to be aware. You've got to be aware that what you're doing now won't always work. It will go in cycles. There'll be times when you just constantly, the markets are breaking out. There'll be times when it's really contained, and you've got to be able to understand that, and you can't be as aggressive when it's like that. There'll be times when it's very fundamentally driven, so you've got to be very aware of like what's going on fundamentally. There'll be times when figures are really good to trade, but it's understanding where the markets are at, evolving, adapting, putting new ideas on top. And then to sum it up, I don't think I've met a single successful trader who's been trading 10 years plus that hasn't gone through several evolutions and got better and got better. Because if you're not getting better, the markets are getting more and more efficient, and everyone else is getting better, you wouldn't just get left behind. Predominantly, I'll be focusing on the microtransactions, because as a human, there's only so much you can be looking at. If you've got 4 or 5 things in your mind, you're not going to have the conviction to put on the little scalp or with a price action trade you're trying to do. At the same time, you've got to be aware of when you're doing it. You're going to be scalping, trying to play a price action trade 1 minute before US non-farm payrolls comes out. Well, you're going to get yourself in trouble. If you're doing it just as the market is now trending off and you're trying to like nick a tick here and there, unless you're aware that it's trending off and it's a strategy that works well then, but you've got to have a general awareness of where the structure is. But at the same time, you can't be going, oh, well, we're near this level, we're near that level. There comes a point where you got to go, well, there's no danger signs here. I'm going to focus on the price action, try and put my trades on. I'd say the pitfalls of getting sucked into the price ladder a little too much sometimes is that you can become blinded to other opportunities that may be available. And when other opportunities maybe pop up, you rather than go, oh, okay, well, I'm trading a technical here, and then you get sucked into price ladder and you see terrors around every corner. You go, oh no, oh that's there, and then you lose conviction in other parts of your trading. So it's very much understanding what you're trying to achieve out of that trade. If it's a price action trade, brilliant, just put it on as a price action trade. But if you've got another trade strategy you're putting on and you go, okay, well, I'm concerned about technical here, you don't want to get spooked by the fact it's gone bid offer 2 or 3 times, because if you're trading off, say, a 10, 15 minute trend line or whatever it is, you don't want to be worrying about the fact it's gone bid on offer a couple of times, otherwise you'll never hold your trades. For orders in the price ladder, sometimes they look like they're real, sometimes they look like they're fake. I'd say several years ago, there were a lot more fake orders there are now. I think with the tightening up of exchange regulation and everything else, I almost always assume the order is real because there is a lot less spoofing. And if I work off that basis, and then if it isn't, I can react quickly. But I'd say nowadays, more often than not, the orders are real.